And so if more companies come into the US market to compete with SATA and STRC, you might see things as high as 15 to 20% yields. But now you're starting to risk the downside scenario where Bitcoin isn't able to outperform that credit hurdle rate. And that might actually, you could get to a point where the yield is so high to try to compete with SATA and STRC that it actually scares investors away because now they don't think it's necessarily sustainable. They don't believe that the long-term Bitcoin compound annual growth rate will outperform that hurdle rate. So I actually think there's only room for kind of a few of these players. And even those players, you have to be really trustworthy. You have to establish track record early. You have to have a big enough collateral base already sitting on it, and that's why Strive acquired Semler Scientific. Is even if on paper or at the moment it wasn't that accretive of a deal, they needed to expand their collateral base massively so that they had enough room to issue digital credit, so that the collateral to credit ratio was sound. And so that was the reason for that. And as for banks, I think Saylor is right in what he is predicting will happen next. So, yes, banks are waking up to this. Banks are talking to strategy. I think it's very possible that banks just become a layer on top of STRC, similar to what you said. You talked to Dan Hillary, what they're doing at Buck. They've basically issued a savings coin where their reserve is sitting in STRC, and then they're providing what is still an above market yield to the rest of the world. I think you're going to see something similar with banks, and this is Saylor's prediction, which is that banks are going to use STRC in the background to collect 11.5%, and they're going to turn around and overnight, you're going to see banks compete and say, "Hey, your deposits in our bank, now we're going to give you 8% yield, and you used to get basically nothing for parking your money in the bank. Now you're going to get 8%." That's going to attract a lot of capital in those banks, and the banks can take the difference between that deposit that is getting 8% and the yield from something like STRC at 11.5. That's a really good yield for a bank that essentially has a monopoly on consumer deposits.
There is something interesting, and I want to show you. Wait, I'll put it up. I just read that today, so it will be probably a week old when this podcast comes out. Um, I saw that today here. Loops, here we are. You that Strive, who issues SATA, purchased Stretch.
Yeah.
I I found this an interesting dynamic because usually like Microsoft doesn't buy or like Google doesn't buy Apple phones. I think like that kind of like a thing. I mean, they do have connections, obviously. So maybe it's a bad comparison, but like, how do you see the interconnection there? I was just like curious because I saw it literally today in my feed.
Yeah, well, I mean, you can imagine that perhaps Strive would have wanted to buy SATA, but that's kind of risk on risk. And so they have to go buy somebody else's digital credit. Um, I think my theory is that we're going to see a lot of corporate balance sheet adoption of STRC because even at the scale of a startup, you can imagine a startup raises a $10 million seed round and they park it in STRC, paying 11.5%. You are now basically getting a monthly tax deferred yield that pays for your team's full cost of operations. You basically covered your burn. You have infinite runway now because of the yield from plugging that seed raise into something like STRC. Now take, larger companies that have more balance sheet than, they know what to do with. If they take a portion of it and buy STRC, that yield now funds their cost of operations. All forward-looking profits from their own business operations can be used to either buy back their stock, buy Bitcoin, invest in new product lines, or what I really think is going to happen is these companies that are buying STRC are going to, within 30 days, see the value and the reality of that yield being paid out. They're going to see how good it is for their cash flow at a time when AI is displacing a lot of revenue lines. And I actually think that SGRC is going to become the new stock buyback, because the problem with a major company like Apple buying back their own stock is, yes, they're creating more scarcity in their stock, they're sending their stock price higher, but they've not in turn increased their cash flow. And in fact, they've decapitalized the business. Because when you do that, with call it $100 billion, you've basically removed $100 billion of liquidity in your reserves that you need for resiliency as a company going forward. But when you do it with SGRC, this is a liquid ticker with massive volumes. If you ever needed to get your principal back, you could. You've got a yield that is, paying a really incredible dividend, tax deferred. So I actually think that companies are going to start adding STRC to their balance sheets to, as part of their treasury strategy. And once they've seen it perform for a few months, I actually think it's likely that a lot of companies are going to take their profits and they're going to start actually expanding their STRC position. And then as their STRC position expands, the yield from that expands. And I think they're basically just going to continue rolling over the yield from STRC and their profitability from operations into more STRC. Because what's amazing about STRC is it really creates the ultimate financial incentive for all other capital participants in the market to do what is essentially buying Bitcoin.
Now, I 100% agree, and it's super interesting. I want to show you one more thing, um, because I'm just so curious about those things. And just for before we get into this, I just want to explain that to people what the Sharpe ratio even is. It's basically what does the asset return to you minus the risk-free rate divided by the volatility. So meaning like what are you getting as X return compared to what volatility you kind of have to endure. And this is an interesting formula to see how good an asset actually is. And Michael just made a tweet today about the Sharpe ratio of SDLC, because calling it like a bank account that gives you a yield is almost like an understatement because it has a way better Sharpe ratio than the most successful companies on planet Earth, like Gold, Google. Gold is not a company, but I hope everyone knows that, anyways. Gold, Google, Nvidia, Tesla. Wait, what is QQQ? I knew that.
That's NASDAQ.
Yeah, Nasdaq. There's Apple. What is BND?
What is that? Sorry, a little hard to see.
Oh,
BND?
BND. I don't know, but it doesn't matter.
Maybe
Amazon.
Beyond Right, maybe.
Oh, could be, could be. But yeah, anyways, like it doesn't matter. It's like all those amazing companies that deliver amazing returns, but they're a lot more volatile. And so, like, the Sharpe ratio is something that especially traditional investors look at. We Bitcoiners, we might not care. We just like, give me the volatility, give me the ups and downs, the roller coaster. I want my 30% a year, my 50% a year, and I'm good for that. And I see it the same way. I don't really care about the Sharpe ratio when I invest, but I know TradFi cares. I know all those portfolio magicians care about their Sharpe ratios. How significant is that three over 3 point like the 3.8 of a Sharpe ratio from stretch in terms of like where companies, individuals, and TradFi people in the future allocate capital.
It's massive. I mean, it's really the point of how SGRC was designed to not only be a current pay instrument, which gets rid of this like having to wait for Bitcoin's 5-year performance, but this idea of no volatility, the idea that SGRC is bouncing between $99 a share and $101 a share. So in the past, in the early days of SGRC, when SGRC fell below the $100 par price, and I'm going off of some research that Adam Livingston, the Bitcoin wizard, did. But he said that it took on average about 66 days for the par price to reach back to 100. Now we're at the point where over the last, I think, 3 months, when the par price falls below 100, it takes roughly 8 days for it to reach back up to par. You can imagine that as there's more and more demand for STRC, we get to the point where it could just be hours. If Bitcoin falls to $99.20, it within the next couple hours, within a single trading day, it's back up to $100 par. So what that does is you're basically creating an instrument with almost no volatility or as little volatility as possible. And now you're competing with the S&P 500 because you're getting predictable returns that are on par with the S&P 500 with none of the volatility. And I would argue none of the existential risk that AI will play in those S&P 500 companies and the disruption to their revenue lines.
Mm.
Basically, all capital has to seriously consider SGRC, and it becomes kind of the tubing, the plumbing for all of that capital that wants Bitcoin's performance, but in a way that they can stomach. This delivers that to every single person that doesn't care about Bitcoin, doesn't necessarily even have to believe in Bitcoin, doesn't have to have any opinion on Bitcoin. They just need to want high yield. And what I think is interesting is that even Bitcoiners like ourselves are starting to look at STRC and we're saying, that might have a place in my portfolio. Yes, we've gotten comfortable stomaching the volatility, but there's something to be said about having a fixed income when AI is displacing white collar jobs. And when you're looking at a bear market downturn right now, but you're already fully deployed and you're saying, would have been nice to have a little monthly income coming in so that I could be DCAing throughout this bear market.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro-seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro-seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.